Hi, this is Steve Van Metre, and welcome to your Wednesday night premiere, where we take about 15 minutes every Monday and Wednesday night to try to take a look at some markets. Still don't make much sense. So what are we seeing today? Investor memory is super short. When is the price crude draw? Wasn't that big of a surprise, but the number was pretty big. The content of this video provides educational information and is not intended to provide investment or other advice. Materials not to be construed as recognition or solicitation by selling a security, financial instrument, or to participate in any particular trading strategy. This video was prepared by Steven Van Metre personal capacity. Business press video that do not reflect the view of Atlas Financial Advisors Inc. or Steven Van Metre Financial. So what we're seeing in the charts, and we'll look at this here in a few minutes, is you're seeing buyers at a certain level, sellers up a little bit higher up. Who are the buyers? The big corporations. I mean, there's nobody right now that's buying as much stock as these guys are. Huge amounts. Who's selling? Corporate executives. So the people that are selling to the company they work for, who is buying their stock back. And so what we're seeing in the charts is stocks are consolidating in this tight range. Of course, bulls are hoping it breaks to the upside, and bears are hoping it moves lower. Of course, we'll see. Now, we do know the corporate share buyback blackout hits its peak by the middle of the next month, so that means a lot of that buying power will go away. Now, today we also saw a huge crude oil inventory draw. I want to say about 10 million barrels of crude. And the crude oil bulls have been just dying for this to happen. But there's a problem with this report, because you didn't see oil prices go like everyone was hoping for, because while we had a big draw, Saudi Arabia has cut their exports to the United States by half. This was planned to maintain oil prices and to bring oil prices back up. So the draw today just wasn't as big as the market wanted it to be. So let's take a look at liquidity. We see the market is just struggling to find liquidity. NASDAQ McClellan Summation Index is kind of sitting at a double bottom, although you can't do technical charting with this, but it's bottoming around the same level it did back in May, June, and it's looking to try to get back up in here positive territory. And all this means is that the amount of money sitting out there to buy stocks is quietly drying up. From the ag commodity sector, experts are weighing in about the cooler weather. Looking at the NOAA 6 to 10 day, their comments here were, we need the warmer weather to move up here. And we're seeing rain come in. Rain is not something they want. And over the 8 to 14 day forecast, as we looked at the other day, this cooler weather, even if it's just a couple degrees cooler than normal, is a huge difference in terms of how crops mature in their final weeks before harvest. So they're not excited about this, and even less excited to see more rain coming, which could mean an early frost if the cooler weather persists. And all of that would be pretty bad for the farmers. All right, let's go and just spend the rest of the time taking a look at some charts. Let me get this stuff cleaned off on my screen, and let's see what we've got. So you can see the S&P 500 is clearly trading. Here's the bulls down here at 28.20-ish. Here's the bears. The sellers are up here at around 29.40. And so you see buying, selling, buying, selling, buying, selling. And at the moment, because it's sitting here in this middle zone, it looks like the buyers have the upper hand. Mind you that it's been just news, unfavorable news, that's caused markets to fall. So right now, the bulls have this market and need to take it higher. That's what they really need to do here. Let's take a look at volatility. It did come down, hit its 50-day moving average, bounced off that, not getting a lot of thrust here off of this, move. So it's telling us we're making a series of lower highs. This is bearish. We should assume that this should come back down maybe one more time, confirm its 200 or 50, 100-day moving averages, and likely spring higher. We still see that in the volatility ETF, symbol VXX, that you will never buy nor sell short, long, or anything, buy an option against anything like that. You will not do that at all. But here you can see it is unable to make new highs. Saw selling today. Again, I expect this to come back down here and confirm this bottom here, and then look to make a move higher into the middle of next month. 5-year Treasury yields did close lower, but they traded higher as market participants, mainly speculators, need to short bonds desperately need to drive yields up, because this is causing a lot of liquidity problems with the Fed on a blackout period due to Fed Chair Jerome Powell telling the voting members to stop speaking. He's going to let the markets do what the markets do. We see the 10-year Treasury yields holding support almost right back at their all-time lows, 0.1% away from there. And the long bond found some sellers today. And where did these sellers come from? Toward the end of some months, it doesn't happen every month, but pension funds have to rebalance. So with the stock market being flat and the bond market being up, they're selling bonds to buy stocks. So they're also helping push yields higher. At the same time, they're helping create a little floor in the stock market at the moment. Let's take a look at gold. Way overrun here, too high. Gold again moves on inflation adjusted 10-year Treasury yield, and inflation is falling even though the headline numbers have not confirmed that. Inflation is indeed falling. We know that because lumber prices are low. I mean, you can see they have just come straight down. This is an excellent proxy for inflation. And you can see they're not far over this big cliff where they broke down. You could see a repeat back down to their 2011 level or even 2016 levels pretty quick. Let's go look at the gold and silver mining stocks. Here's GDX and get up here into a major sell zone. We can see the sell zone is huge. This is the back where the last big move brought it all the way down. And I expect we'll see that one more time. So some major support is right down in here. This move was way overcooked. It should not have moved this fast based on what we saw here. So a lot of speculators chasing this, as we know from looking at the hedge fund or Hedgeopia report. Unfortunately, our website's not functioning. Same with silver miners. Again, major area of resistance right in here. Again, this should reverse. This normally does not move. Gold does not make this move just on Fed rate cuts alone. It needs quantitative easing to bring the money multiplier down. We're not seeing that here. Let's take a look at the long bond TLT. I don't think this is the big breakout. I do believe this comes back down in here, or the 50-day moving average moves up and it reconfirms. I want to show you why, and we have to go all the way back to the breakout in 2008. And what happened here is I drew kind of the support level, this purple line. You can see it found support right along here. There were a couple instances where it would move over but quickly get rejected. And then right before it broke out, it made a big move over ahead of its 50-day moving average in green, came back down, reconfirmed it. So this is where you would add positions. Shot up again, didn't make it, came back down, reconfirmed moving average a second time, shot back up, reconfirmed a fourth time, and then went to the moon. So it tells me from a positioning standpoint, the speculators need to drive yields back up because they're on the cusp of that breakout. Now, if we go back and look at the current chart, you can see, if we go forward, we're way over that all-time high. So it tells us there ought to be a pullback because sellers need to short bonds, bring yields back down, and then boom, take off from there. Will they do it? We'll see. But that is what should be happening at the moment. Looking at oil and gas producers, crude oil has traded higher the last couple of days, but did not make a major move higher today on today's inventory report. And you can see small oil and gas producers, companies are in danger zone. They're near their all-time lows, as crude oil, which the actual doesn't want it update that often. I don't know why, but looking at the ETF USO, we see it sitting under its 200-day moving average, generally considered a bearish signal when it can't get over the 50-day or its 200-day moving average, despite a big draw. Taking a look at ag commodities, forming a nice bottom now, came down, made a bottom, big selling of corn, even though that report from the USDA was again inaccurate. Buyers came back in, sellers came in hard last night, but buyers did push prices up and are forming a nice bottom. So this is a good sign for the ags, who've got a lot of ways to go up and have every bit of potential to do that. Looking at emerging markets, no sign of a buy opportunity here, but getting lower. So this would be a nice opportunity if it holds here against gold. So if you miss gold move, guess what? Emerging markets will follow. And if it doesn't, that means gold's way, way ahead of itself. And we can just take the gold ETF here and overlay it. And you can see either emerging markets are going to come down and give a huge opportunity to go from this 30-some range way up in here and make the same return. Or gold's goose is going to get cooked and it's going to come shooting way, way, way down. So nice thing is when you know that they kind of both move together, if you miss one, you can look to the other, and if one's wrong, well, the prices are going to come way, way, way down. Let's take a look at General Electric, big trouble in GE land, who is trading just above its 2-year lows. You see those are set back at $6.66 a share. We're seeing just under 8. GE's got a lot of debt, and if that debt gets rated lower, they're going to cause some earth tremors, tremors in the market as those bonds get shoved down into high yield zone, and the market tries to digest that in a period of lack of liquidity. Let's take a look at ExxonMobil. Great stock to look at as a proxy of the broad oil industry. And you have to go way, way back with Exxon and notice that it's sitting right at 67 a barrel. Main buying goes between 65 and 67. This continues to break down. You're going to watch Exxon bring the entire oil industry and the broad stock market down with it. So that is interesting, and we'll see kind of how that shakes out. Apple sitting right above that symmetrical triangle, but is showing this other triangle pattern across here where we say selling all in this 210 to 215 range, and it's held. So we'll see, can the Apple bulls get it up here? They need to, because Apple is really driving the market. So buyers need to get this stock up and hopefully push through the sellers. We'll see if they're able to do it. So far they haven't. I mean, it's pretty rare that you get this amount of consistent selling in this zone and nobody breaking. Of course, when you have a lot of shares outstanding, there's a lot of people that still want to sell at that zone, and we can very, very clearly see that. Looking at trading volume on the major S&P 500 ETF, so not a lot of trading volume, not a lot of push to get markets higher, but again, bouncing between corporations buying and executives selling. So I think that we will, let's see if there's anything else I want to look at. I think we'll go ahead and wrap things up here for the day, but not a lot in the news this week. Friday, obviously, month end, and then next month things really get interesting with the Fed meeting, the corporate share buyback blackout getting kicked in, and then the big Treasury draw. Not a lot of liquidity here, so those bond sellers need to get those yields down pretty fast before all of this stuff kicks in, and we watch liquidity go poof and interest rates sink with it. I'm Steve Van Metre. I'll see you Friday. Bye now.